All right, guys, tonight we're going to talk about price movement and price reversals. This is another beginner video I wanted to make. Probably not the first one you should watch, but we're going to talk about supports, resistances, which we've talked about in the past. I'll leave the video down below. And we're also going to talk about candlesticks and candlestick patterns and what they say. So there are 6 basic candlestick formations. You have your long candlesticks. Hopefully they're all in this chart. I'm sure they will be. You have your short candlesticks right here that I'm highlighting. You have doji sessions, which are these flat ones that don't really tell you much, but they do with the right candles next to them. So they do tell you things with the right patterns, but they don't really tell you anything if you're just looking at it by itself. You have candles with long upper and lower candles, like this one here and this one here. And you have long lower shadows only, which indicate a bullish reversal. Bullish means up, green. Bearish means bear, down, red. And a long upper shadow, like, we don't really have one here, but it's just the opposite of this, okay? And that is a bearish reversal. You see one here. Here's one. That's bearish. Even though it went up the next few days, it's still a bearish marker. So if you stay patient, you see that yes, it is bearish. So see, here's another one. Here's another one. So that's something to keep an eye out for. There are some patterns that you might see. One is called 3 black crows, which is 3 red consecutive candles. I don't see one in this chart. Let me see if I can bring it up somewhere. Here's some. 3 black crows. 3 black crows, 3 red crows. Here's one. 1, 2, 3. It's a bearish continuation pattern, so that means it's going to continue into the future for at least a short while. Now, there's a bearish and bullish engulfing. Let's go back to the S&P. It's probably one of the more common moving charts. So let's see, what do we got? Bearish engulfing is when you have a green candle. Let's find one. Come on. Like so. So you have a green candle and you have a bearish engulfing. So the next red candle engulfs it and closes below. So you have there, and you don't really have one coming, but it is a sign that it is weakening. And as you can see, it dropped, and then it went just a bit higher, and as you can see, there was a bear market for a while. But obviously that's not going to tell you everything, so that's where we come to our studies, which are your moving averages. And as you know, I've made a video about this. It's called Simple Moving Average Trading Strategy. It's one of my earlier videos. I think you should watch it if you're gonna be learning to trade. It's simple. Trust me, it's not hard at all. But here we go. Now you have your 50-day, 20-day, and 9-day. Usually it would be 9-day. Here it's 7, but these are just moving averages, and when it's below the candles, that means it's bullish. When it's above, that means you can start to see bearish candles, like so. So see, the candles are below, that means it's going down. When it's below the candles, you can see that it's trending upwards. So one thing we also know is that price moves fastest at resistance here and support here. I also made another video talks about resistance and support, which is really helpful and is probably where you can be the most profitable, because your patterns hold truer at those prices, because everyone's watching those prices and it's either going to power through or bounce off. And usually when it powers through, it's in a gap form. So as you can see here, this is called a gap. And that tells you there that this is going to go for quite some time, because it's so powerful. It's such a powerful move that you can jump in here and weeks later you're here. And here, what tells you this? We were below for a while, and then you consolidated here. Consolidation is when price moves sideways. And when it finally decides to pick a direction, either up or down, it's usually really powerful because when it consolidates like this, people are just waiting. And then once they see the move, they just jump in. Okay, so this is where price moves the most. Supports, resistances, supports. Okay, now, not everyone's going to find the bottom. If you know the bottom of every bear move and the top of every bull move, you'd probably be the richest man in the world, right? The smartest man in the world. But you will notice weakness. So once you see this with a long lower candle, as we said, represents a bullish reversal, and then you see a bearish or a bullish engulfing. So this is a bearish engulfing when is engulfed by the next candle, bearish red. This one is, it's not exactly a bullish engulfing, but it's a gap. And we know gaps indicate powerful moves towards the future. So gap, price went up, up, up. Gap, price went up, right? A real bullish engulfing would look something like this here. You see this? No, actually, that's not true. The wick is longer. I don't see one on this chart, honestly. Let me show you one real quick. It's basically the opposite of a bullish engulfing, bearish engulfing, but here you go. You see it here. It engulfs the last candle and it's green, right? That's a stronger one than the one on the SPY chart, but you get the gist of it. And these are things you need to notice. And you're going to put these together with your moving averages that tell you, and your MACDs and your RSIs. So this is your MACD. When this blue line crosses up, that means the buyers are winning. So more people are buying than selling. So the price is moving up. Once it crosses down, that means more sellers are selling than people are buying. So this price is going to drop, right? So that's not like none of this, not a single one of these things alone will tell you what you're going to do, what the price is going to do. But they do help when they're all put together. And you could increase your chances of getting it right with all of these put together, with your candle formations and your moving averages and your RSI. See, you see how it says 70 here and 30 here, those highlighted? Once it's above 70, a stock is considered overbought. That means there's too many buyers and people are going to start selling soon because there's too many people buying. So you have this up here, too high. And obviously you can see it was above 70, so you saw the price drop. And once it gets below, this was real bad because this was during the COVID outbreak. So people were just selling. And it was getting a little bit crazy. But see how it gets below and it bounces up. And it correlates with the price up here. So you can look at that along with your candlestick patterns and around your supports and resistances, and you could get yourself a really powerful move in a direction. And that's when you buy and make yourself some money, guys. Now, that's all I wanted to show you guys today. I want to keep it kind of short, but hopefully I didn't make it too hard to understand. If you're just getting started, guys, have any questions, just comment below. I'll make videos. If you need a better explanation on something, I'll make videos. Just keep up the support. Anyone that wants to learn can do it. It doesn't take a genius to do this, guys. You can make money for yourself. Okay? So I'll see you guys later.